Okay, welcome everyone, and thank you for spending an hour of your time with us on this maybe rainy but lovely Saturday, no doubt. We are pleased to have both my co-founder Shelvin and also our partner in London, who does secondary sales, lettings, management, and he's Peter, to discuss the property market in London under the current climate.
Good morning.
Morning, everyone. Morning, Peter. So we have a handsome panel with us. I don't know whether you agree. I'm Jasmine, and I'll be the moderator for today's webinar. So together with Shelvin, we've been working alongside in the last 15 years, where we have assisted over 2,000 Malaysians investing in various markets, such as the UK, Japan, Singapore, New York, Canada, and Australia. And in our time together, we have seen the most significant interest coming from clients who wants to invest in the UK, which surprisingly, and it's a very pleasant surprise, to today, this demand is still ongoing. So joining us today, which we have mentioned, Peter, all the way from London, where he has been running a successful agency in the last 16 years, doing sales, lettings, and management. Peter's service level is nothing short of excellent, where he has only received 5-star reviews from clients, which in my opinion is an outstanding achievement, and RBC is really honored to be working alongside with him. So without further delay, let's begin.
Good morning, everyone.
Morning. So I think there's been a lot of jitters in the marketplace since the beginning of the year. And as the market leaders, we do like to keep our clients updated on what's happening and also on how they can best position themselves in their investment journey. We will start off this webinar with discussing the recent news, then moving on quickly into how these news have impacted the London property market, and finally introduce one of the best-selling projects in London to you, which we have huge confidence together with Peter in helping you get a very decent yield and growth in capital value as the London market progresses. I shall now turn over to Shelvin and Peter to begin the discussion.
Hello, everybody, and very good, beautiful Saturday. I'm here to give you guys a brief update on the property market in the UK, especially in London. As you can see, I'm rolling out all the screenshot of all the headlines on the internet and newspaper as well. And everyone must have heard that recession is hitting UK. Bank of England has just launched the most significant interest hike in the recent years. So the interest rate now jumped from 1.25% to 1.75%. So Jess, I think you might have a question for Peter.
So Peter, since you are in London at the moment, and with all these news in the market, recession, interest hikes, and as well as the rising inflation, what have your ground experience been so far?
It's a very good question, Jasmine. Good morning to everyone who's joined us for the webinar this morning. It's a pleasure to be saying hello and welcoming you all from sunny London for a change. The UK market, I would say, regardless of what's going on in the world, is a bulletproof market. It's a very safe place to park your money and get growth every single year, and a very, very strong rental market. The facts back it up. On the government website since 1979, property in London specifically has seen year upon year growth each year by 5 to 6%. So those buyers who bought 10 years ago, while they've been sleeping, their property's been working for them every night while they're sleeping, getting 5% back annually, which is a great position to be in. I've noticed one character trait in all successful investors. They work, they have their day job, they run their company, but they also invest in assets and property. This is how they've created generational wealth to pass down to their kids, as I've been working very hard, making investments and reaping the rewards, not just for myself, but for my kids and my kids' kids in the near future. So there's a famous saying that says, if you wait, you never buy property, but when you buy property, all you have to do is just wait. The money always comes. The strategy is obviously buying at the right time. And the best time to buy in any market, if the money is there, is within a downturn. Why? There are better deals. Developers are more open to selling. But ultimately, the rental market is doing something it's never, ever done before. After a black swan event that we've all experienced, a worldwide pandemic, our portfolio still stayed 100% fully vacant, and the rents were still coming in. There was still demand, even though there was a worldwide pandemic. People still need places to live, regardless, and food to eat. They're the two basic fundamentals. You invest in feeding people or housing them, you'll always be busy. Right, so the rental market currently in London in the last 8 weeks alone has seen a growth of 28.8%. So that means now, for the first time ever in London, the property has actually declined, in the sense that a lot of landlords, some of them got nervous during the pandemic and sold up. That was a grave mistake that they've made, because they've lost out on 10% annual growth in the last 2 years, which they would have had. And now they would be reaping the rewards for the upturn in the rentals coming back onto the properties. The main reason this has happened is, again, backed up by government statistics and all the London major portals, Rightmove, Zoopla. There is 56% less properties in the market for rental today than there were 3 years ago. This has caused a demand effect so strong. I was telling the panel earlier that we launched 4 properties last week. Across these 4 properties, it generated 651 new inquiries. We carried out 100 viewings on 1 3-bedroom flat in Zone 2 in Maida Vale. The queue was going back from the flat, through the gate, along Elgin Avenue, all the way back to Maida Vale Station. People thought that we were having a rock concert, and we weren't.
Coldplay concert pre-sales, that sort of
There was a rock star agent. There was a rock star agent there, right? But all we were doing was showing a property, but the buzz was so strong, you know. So this is a great time to get into the market, because you're never going to find a time in history where the sterling is so low. So if the money is there and it's ready to invest, London is the place to be. And another fact, and backed up by statistics, modern properties, modern developments with concierges and communal spaces for residents to enjoy attract the best caliber of resident, i.e. someone who can afford your rent, and they stay the longest, and they attract the best yield. And when it comes to resale, this is what the modern market want. They want a safe, modern development where they can just move straight into with absolutely no refurbishment costs. So coming back, I have 3 daughters myself, 15, 13, and 6. The older 2, within the next 5 years, they will be traveling abroad, going to another country to study, to get their degree. And as a father, what would I want? I would want my daughter to stay in a modern, safe development with one of her friends, with a concierge and CCTV and facilities for her to enjoy. I certainly wouldn't want to be paying to send her to a great university and substandardize that experience by renting a very poor accommodation where she'll experience problems with probably poor internet and a leaking roof. I work too hard to not, not give that to my daughter. So they're my key points for the London market, and they're my key points as to why I feel now is the best time to invest in London.
I think that complement Peter's comment on the current situation. I'm sure many analysts or economists have been quick to conclude that, whatever that is going on right now, the continuing interest rate, the interest hike is likely to slow the housing market. And thanks to Peter for injecting all the positivity on your brief note. But I'm sure that all of you who are listening right now, you are still interested in investing in London properties. So don't despair. Take a deep breath and stay with us. We give you a different cocktail, which will then boost your confidence in your investment journey in London. Yeah. So next page, I'm going to tell you a bit more on the impact after all the announcement of the inflation recession. So always know and remember this. The London property market is a global property market, not a domestic market. It remains as the favorite playground for all the global investors from all over the world, including yourself and myself and Jess and Peter. It is driven by international money. You'll be surprised actually, because if we actually do the research and the data and all, up to 85% of the money invested in London is international money.
Yeah, and probably that has even increased to 90%. Yeah, in the recent years as well, with everything that has been happening as well. So Peter, just a question for you. So in recent times, as what Shell has said, London is a global marketplace. So just out of curiosity, what other nationalities have you seen an increased interest in buying up London properties? Probably not Russians or
it's a good question, but from the day that I started selling, it is very much a multicultural investment. I wouldn't say there's one particular, but we deal with the Asian market specifically. We had a massive boom of Chinese investment 10 years ago. The last 10 years after that, we had a lot of Russian investors coming into the market, buying subprime super properties in central London. When you go, we spend a lot of time in environments where people are buying, and we see people from Israel, we see people from Greece, we see families from India, we see every type of nationality here trying to buy and invest property here, because there's a reason for that. It's the track record of the city, it's the safeness of and the legal systems here. Everything is a very safe process to put your money in and get your money out if you need to. But long-term strategy is to buy and to hold and only sell in an up market. But generally, in today's market, every single nation, every single country wants to get into London to park their money.
Yeah, indeed. I think there's over like 230 languages being spoken just in London itself. It's certainly a melting pot.
Yeah.
So
absolutely.
Shelvin, coming back to our Malaysian buyers. So you've been the person on the ground. What have you been seeing? I remember that pounds used to be 7 ringgit or 8 ringgit when, many years ago. Now it's come down to about, hovering between 5.30 to about 5.40. Have you seen an increase in Malaysian buyers wanting to pick up London properties due to this exchange advantage?
Yeah, I can perfectly speak on behalf of all the Malaysian investors. They're in the market often for the economic factor, including our own country risk, especially when there are uncertainties to our currency outlook, Malaysian ringgit. So at this point of time, the cost of entry, especially for Malaysian, are definitely in for medium to long-term investing. So the current exchange rate is very attractive, very, very attractive. It makes it even more affordable to enter the UK, especially London property market. So to buy properties in London for many Malaysians means that not only they are diversifying their property portfolio, they are also diversifying their currency portfolio. So having a strong and stable currency in your portfolio is always a smart investment move to make. So based on the track record, GBP is strong, and it's the most importantly, the most resilient currency. So this is especially true when compared to Malaysian ringgit, which has been unfortunately gravely affected by political instability or all the political fiasco. I can name a few, like with the 1MDB scandal, and we basically had 3 different prime ministers in 2 years. So these are basically all the instability that we have been facing as Malaysian investors.
Yeah, it's certainly a good time, because I remember that in during the GFC in 2008, 2009, I think the lowest that pound went was about 495. And that was only for a month or two. And then it jumped back up again. So now at the entry point of 530, 540 is certainly a very attractive entry point. So coming back to the UK, Peter, we also know that, you know, there's been a lot of news on UK going through some turbulent time as well in the past years with Brexit. There's been a lot of uncertainty and nervousness, as well as, you know, you have quite a few change of party leaders as well. So how has that impacted the economy, and obviously flowing down into the London property?
Yeah, I would, you know, I would say as a citizen here and just seeing everything unfold, I think our governments and councils have made grave mistakes along the process. The point I'm trying to make is we had a black swan event, right? So nobody's ever been there before. So everybody reacted or acted in a way that they thought they were doing the right thing at the time. Genuinely speaking, I think we still have to see where this will unfold in terms of the real effects of it. One of the short-term effects that I can see, everything that's happened during that period and uncertainty, it's actually caused a bigger problem than we've started with. There are not enough properties in London for people to live. Had they known that 3-4 years ago, when they started introducing certain policies, they may have looked at things very differently. So I feel that the Black Swan event, issues with Brexit, issues with our government have actually caused a housing crisis in London, in the sense that we have a massive rental market, which is worth billions and billions every year in London. And we have not enough places to place people, right? So if we're a global powerhouse and people are coming here for work, which they are, they're securing jobs, they're coming to study. We need investors to come into the market and create these spaces and reap the rewards, because the government actually launched a scheme yesterday to encourage investors to come into London and start buying again. So where I feel investors should have hung on just a little bit longer, they would have reaped the rewards. But everyone's positioning is different. If someone is over leveraged, you know, at the time and made a poor investment, or bought an old house that needed a lot of maintenance, and you don't have the money, it's difficult. But with a new development, every pound is accounted for, because you don't have to spend a penny on that for the next 5 to 7 years in terms of maintenance, right? So there are things that you can do to limit your risk in any market, and that is to make sure that you don't have to spend any money on the property for the next 5 years. So the rent that comes in stays as a maximum investment. So the point I'm making now is this issue has caused a bottleneck. People want to rent. There are not enough units currently in the market. They can't build them fast enough.
Yeah. And also, like, during, I think when they were going through the Brexit talks and all that, there was all this talks about, you know, London losing its financial hub status and big companies and corporates leaving as well. But in fact, it actually did not happen. So HSBC did not relocate to Frankfurt, Citibank stayed on, and Google actually made, I think, another purchase, big 1 billion as well as King's Cross as their HQ in Europe.
Yeah, so Google's
over 7,000, 8,000 staff. So I mean, it's been amazing. And
yeah,
I think a lot of people see that.
Yes, so Jasmine, the HQ by Google in King's Cross is the largest investment ever made by any company in property, full stop. And they made it in London. That's a big statement.
Yeah.
Yeah.
I think the investor, be it individual investors or institutional investor, would still choose UK or London as the top choice. Also largely because of the legal system as well. It is a lot of transparency, and the system is matured and it's very easy to understand. And it's very convenient for investors to buy, go in, manage, and go out. So the exit strategy has been pretty prevalent. Whenever you invest in a new jurisdiction, it's always very important to be already thinking about your exit strategy, so they don't have any restriction in terms of selling it. I could do the comparison with Australia. They will only restrict people to sell it as a second hand to the local Australian PR or citizen, which is not the case for UK. You can sell to anyone, you can reassign a contract to anyone at any point of time. So even you can reassign a contract before the completion. So hence, that makes London being the big pool for many players. The exit strategy is just simple. It's available all the time. So all in all,
Yeah, that's a very good point, Shelby.
yeah. So all in all,
The
it
exit
does
strategy is
present
certainly
good.
very important.
Yeah, so I think all in all, it does come with a bit of a global branding as well. Apart from exit strategy, apart from legal, there is a branding effect. People love it for culture, love it for art, love it for the history. People just want a piece of London. So London always had that wow factor and will always do. It's a brand itself, it is classic and it's everlasting.
Yeah, certainly. Yeah, definitely an evergreen market in as far as all the different markets that we've been marketing and also helping clients invest in. London is definitely a city that stands out.
Yeah. Coming out is the impact on the supply and demand.
Yeah.
Question for Peter.
So I suppose, Peter, now that you have shared already a little bit, giving them a teaser of, you know, how has the supply versus the demand. So you're saying that the supply and the demand, the imbalance is still pretty great.
This is the biggest imbalance I've ever seen, ever. I mean, remember we had the financial meltdown in 2008 and sales prices, steel prices went up, by the way, yeah? Steel prices, there was all that talk 14 years ago. You know, they were never going to recover. It's really, a year later, prices went up 15%, okay? So it doesn't matter what, there's always going to be instability in the world somewhere. But the fact of the matter remains, London has big companies trading here. People come to work. We have some of the best universities in the world. Thus, the world is open for business again. People are coming. Thus, the shortage has begun. We have the biggest, as like I say, we've 55% properties less in the market than 3 years ago. That is a significant, worrying number. You know, even as an agent, there are agents out there probably thinking, right, I've got all these tenants that I need to service. Where are the properties? This is the first time ever, where there is a major chain shortage. So going back to my earlier point, if the money's there to invest, reap the rewards now, because you're going to get growth and you're going to get 30% more rent than you did 2-3 months ago.
Definitely. Yeah. And Shell, you've been in the market, you know, on the ground, helping clients in the last 15 years. You have a lot of in-depth knowledge on this supply and demand imbalance issue. So can you just also share with us why this imbalance issue keeps continuing? Is it solvable?
As much as UK government would love to, but and also they have been trying very hard to, the supply and demand imbalance is almost an impossible task to fulfill, to tackle, especially in current economic situation and in environment. There are basically 3 elements that I can break down which contribute to the imbalance. So number 1, high land prices, which again is driven by high demands by developers. Yes, for sure, for developers who want to build housing but they are all priced out of the market. So due to intense competition and in the capital city of London itself, demand to acquire a land is not only restricted to the local UK developers, but also very much sought after by developers from Southeast Asia, like Singapore, like Hong Kong, like us, the Malaysian, we have a few big boys who have already gone in, like EcoWorld, Setia, like Battersea Power Station Scheme, EPF is there. You can tell everybody that I own part of the land as well. And even Middle East, and etc. So all these contribute to a very fierce competition. And point number 2 is the scarcity of land supply, especially in the landlocked cities such as London. And last but not least, number 3 is the lengthy planning permission process. You probably need a panel, a right team, who really understand the process, the planning system. And you need to know it fluently as well. You need to be very well versed. But also, apart from having a knowledge team, you must also have the deep pockets to fund the planning application through. So many of which, you know, all these contributing to a lengthy, it would take years to accomplish. So hence there is always a delay in terms of delivering and matching or even closing the gap in between supply and demand.
Yeah, it sounds like a big problem for the UK government to solve, but it's definitely good news for overseas landlords and investors as well.
Rental.
So let's move on to perhaps the next slide, which is on rental market. So we've been working with you, Peter, for quite some time now. You've got rave reviews on your customer service. And so can you already, I mean, you already shared some. So in terms of letting, I suppose you have very good news. It's been, how about during the COVID time?
So during the COVID,
has it been slow in any time? Or I mean, now that post-COVID it's been really healthy from what you're saying to us.
This is the interesting thing about changing markets, isn't it? When the Black Swan event happened, for the first time ever, people wanted to move out of the city because of the dangers that was happening at the time. Okay, they wanted to go back home and save money. For the first time ever, it was a renter's market because people weren't sure if they were going to have jobs or, you know, they were being furloughed. So people were going out of the city. But like I said, all that, the people that tried to save money at that time, okay, they've come back to the city 2 years later. They now can't afford to rent in the city anymore. They're now stuck, okay? They're now stuck out of the city. Had they actually signed, if they actually, like us, we signed people on longer contracts, slightly lower at the time, just to ensure the money was coming in. So where we stabilized the portfolio, everything was full. We didn't have any vacancies still. There was still demand because people still need people to live. But the same residents that were paying a price that was stagnated the year before and the year prior, they've just all renewed at a 30 to 40% increase on what they were paying before. Some people have said, no, I can't. But for every person that says no, they can't pay that price, there are 100 people waiting for people that can. So the demand, because of what the councils and the governments and the Black Swan event created, if there are 50% less properties in the market now, that means there are 50% of people out there that will pay over the odds to secure a property in London. And my gut feel, touching on your point earlier, Shelvin, about land prices, the other thing we also need to discuss is the price of materials now.
Yeah, absolutely.
Yes.
Since we've had Brexit, one thing that has happened in London that's affected developers and builders is the price of bricks and mortar and the materials you need to refurbish and build a house. So there's no real saving now to go and do a refurbishment and buy something older because you're going to pay 30% more on the materials, right? So it's very, very hard to predict if the materials are going up and the demand's gone down. That means that the rental market for established portfolios out there are just going to keep doing this. And in my humble opinion, if prices in London, which I felt were unaffordable 20 years ago, but they've still gone up every month, right? That means in the next 10 to 15 years, property in London will be unbuyable for 99% of people. It will be like Manhattan, where people only rent. And if you look at the London price point market compared to Tokyo, Paris, and other major cities, guess what? We are still 15% cheaper than buying a property in Paris.
That's what I've been hearing from our clients as well. And Kelvin, maybe you can also share with us the feedback from clients who has done completion during the COVID time, and perhaps also draw a comparison of renting an apartment out in London as compared to renting it out in KL.
Yeah, absolutely. I remember during the lockdown last year, of course we had clients coming through and an email to us and say they have some void period, an incoming void period, because the tenants wanted to move out or they relocate for any reason. And just imagine lockdown back then in UK, make viewing and inspection very challenging. It's almost impossible. Everyone cannot go out unless you're doing essential services. But the units available for rental in the market back then was super limited. So you might assume 3 months vacancy period, which may be the case for us in KL. But the longest vacancy period we handled last year was only 4 weeks. Not even 4 months. And comparing it to situation in Malaysia. So let's just put things in context between two countries where office buildings, let's go to the corporate first. Office building, you were probably seeing typical 30% occupancy rate, which translates to 70% vacancy rate. And residential properties took around 6 to 9 months to rent out, including my apartment in KL. So there was like roughly about 10 months vacancy. I just keep paying for my loan. Eventually I had to say, oh my God, I need a moratorium because I'm not gonna pay for it when I don't get income. So all in all, the point I'm trying to make here is London is a different creature. So we see clients demanding a higher rental during and post-COVID. So that is the power of macroeconomics in the UK market.
I was recently in KL just last weekend for a week, and on the ground, I mean, Shelvin is the person on the ground speaking to clients most of the time. I did spend a week in KL meeting up with some old clients and talking to also some new buyers as well. And they've all, shared similar feedback of how hard it has been to rent out their properties if they have a condo, especially in the KL city area. During the COVID time and even post-COVID, they're still struggling because there is a drain of tenants out already. So I think in comparison, they were very, very happy with what they have done as well in their London properties. Yeah.
I think to also add a bit more comments on the employment rate in London, why London still being a main employment hub. Allow me to share with you, if you don't know yet, London is Europe capital for tech and innovation. So they are basically home to more than a quarter of Europe unicorns. So apart from tech giants like Google, Facebook, Amazon, Microsoft, Twitter, YouTube, Apple basically moving into Battersea Power Station. They are actually occupying 6 floors of it, and they will be employing roughly about 14 to 1,500 employees. All in all, I just want to stress that there is a bright future for London. They employ tens of thousands of tech workers in swanky offices across London, and some even have major expansion as well. So employment rates remains at all-time high at 75.5%. And it is still climbing at a relatively fast pace. So let me give you a comparison. So London unemployment rate was actually 4.6% in the second quarter of 2022 this year, compared with 6.3% a year earlier. So some corporations even are finding really hard to recruit because they actually need more manpower due to expansion. But that means what? That actually means more job opportunities, more local and foreign talents will be more motivated to serve the economy. So there will be less people that will be out of job. Anyone gets employed. They have income, they have more disposable income, they can actually pay the rent as well. So that's the entire logistic that we should look at.
Yeah, it's a very peculiar situation, isn't it? It's supposed to be a recession time, but we are backed by strong employment rate. There's still plenty of jobs. There's still plenty of local and international money flowing into London. So it's a very peculiar situation. So going on to the next slide, I suppose in rounding up this section of the webinar, I think clients might be curious to sort of know what kind of strategies they can actually adopt if they want to invest in London property market now, whether they have the funds now or they need to accumulate the funds later. So perhaps, I mean, Peter can start and then perhaps Shelvin also can add on later on, you know, you guys deal with clients all the time on the ground.
Yeah.
Yeah.
Am I going first or Shelvin? Sorry.
Peter, please.
So we're talking about
men go first.
That's very
Only today.
Yeah, only today. Only today. So look, what it basically means is once you get your hands on an asset in London, it means two things for me. It means a safe, strong rental income. When you invest, it's a really simple maths. I'm spending this much and I want this much back. Yes. So if you put your deposit into a bank in your country or here, on my banking, I get 0.1% on my client accounts. So why would I have my money sitting in a bank doing nothing every year when I could be getting back 5%, 6% return at the end of year one from my rental income? So that's the first thing. Your money will grow. It will grow and the asset is already making you money. So it's twofold. At the end of year one, year two, you would have made 10%. If the money stays in the bank, you may go on holiday, you may have a fantastic holiday, you have the memories, but no asset. So for me, and again, the reason, again, working with very high net worth individuals and looking how they make money, they identify a property to buy, they want to hold it for 5 years. At the end of the second and third year, they go back to the bank. They go with we provide them the statements and the rental income and outcome. They go to the bank and they say, right, my property's now gone up this much. Can I please have some more money? The bank will give them the money at a very low rate. I know it's gone up, but for me, it's still very low to be borrowing money at that rate. For me, I think it's still fantastic, comparing it internationally. So you're going to be able to have money given to you by the bank. Obviously, your rental figure will go down slightly, but then you've got a chunk of money to buy another one. And you're not using your own money. You're using the money that the asset has made for you in gains. So it's really, for me, it's really simple. You put your money in, you get 5-6% back every year, and you can borrow more money off the asset to make more investments long term. So within our sort of matrix, within the first sort of 3 to 5 year cycle, you could have 3 to 5 assets under management or within your portfolio, earning 5 to 6% and making your money back instantly.
Yeah, and that's also not to add the possible currency gain as well, isn't it?
Yeah.
Exactly.
Yeah,
And may I ask, will the investors in this chat today, would they be buying through a company mechanism, or will it be individual names?
I think mostly will be on individual names.
Okay, I
Yeah.
understand.
And Shelvin, how about you? What would you advise clients in terms of the strategies that they could adopt in looking at the market right now? If they have the money now, or should they wait, or should they buy something that completes much later, you know?
This is basically a FAQ because I get this question every day from our clients. But in my honest opinion, and coming from a professional view as well, London and UK, or UK as a country or as a whole, will definitely ride through the storm. Yeah, the storm including recession, inflation, or interest hike. And this is quite evident from all of their track record, the historical track record for the past 50 to 100 years. We just don't see that the property prices will be coming down. It never happened throughout our career as well. Ever since we started in 2009, I mean, remember, Jess, we were doing paper advertisement. Every week we advertise, the price just kept going up. It never went down. So the market and currency is so resilient. The fundamental imbalance between supply and demand, and also considering the rising construction costs, like what Peter touched on earlier, the material costs.
Yeah.
It makes it now the perfect time to go in to buy. So if you are ready now, it's the best time to take advantage of cheaper currency. You can also immediately enjoy the strong rental returns, while other camp of investors may wish to take a more cautious route, where they probably just want to put in minimal deposit, capital deposit or outlay, or rather the developments be completing years later. Probably in somewhere between 2024 to 2024 to 2026, where the forecast I think is when we will be all out of the economic uncertainties, and we will still reside in a low interest environment. So I just spoke to a client yesterday from a dinner, and he actually looked at London property roughly 8 to 10 years ago. I can't remember which year, but he was actually looking at one of the schemes that we marketed when we were still with the old company. So he asked me, hey, Shelvin, I looked at this project before, but I didn't go in. Now I regret. I said, do you want me to say something even more that will make you regret even more? He said, oh, you better tell me what is the capital appreciation now. So the moment I say the resale price in that particular scheme, he nearly fell off a chair and say, yeah, I should have gone in. I should have gone in. I say, hey, don't worry, it's not too late yet. Now you're speaking to me. Now is the best time to go in as well. You have the money. You want to hedge against the currency, or you want to buy something for your children, do it now. Don't wait. So this is basically all real life story, and hindsight being our greatest teacher. Just don't look at whatever is being presented to you now on news. You have to be more forward thinking in that sense.
Yeah, definitely. I think it is hard to probably buy in at the timing at the lowest price, but you do want to get in when you can and when you're ready. So that I think to me is a good time as well. So thank you, Shelvin and Peter, for sharing so much with us. You've both given us and the audience a strong impression of how stable and solid the London property market is. And be it from the rental perspective or from the capital growth perspective, London remains a top destination for global investors. As really, I mean, there are not many cities that can measure up to the offerings of what London is. It's a very unique proposition. So hearing from us now, all of us now, Shelvin is now going to share a project with all of you, which has been selling and renting very well in the earlier phases. We are now in the later phases, but definitely a very good and affordable project for all of you to consider. So over to you, Shel.
Thank you, Jess. I'm going to make it quick and simple and easy to understand, just like the legal system in the UK. Okay. Now, so this is called Royal Eden Docks. We have two phases, the Ellipse and Wellspring. So I'm going to give you a quick summary of the developments. This particular project is located in the east of London. So it's basically just one stop away from Canary Wharf. And it is actually being one of the highest volume market with roughly about 150 units transacted in 2021. And remember, 2021 was when the lockdown and the pandemic hit us globally. It is also a regeneration project worth 8 billion investment. For me, it's a development that tick all the boxes. Is that sort of all the essentials that will offer a solid ground and factors to achieve both rental and capital stability. Now, thirdly, well, its infrastructure spending is massive. That includes the Crossrail, 500 million London City Airport, and 1 billion Silvertown Tunnel. So there will be a plan, even for a plan for an Institute of Technology that focuses on transport and engineering and infrastructures, which will be closely working together with TfL. Yeah. Now, fourth, ready tenants. You are surrounded by executive level tenants who work in Canary Wharf, Stratford, City of London, and the current asking rent is now even higher than what was being forecast last year. So last but not least, you'll be backed by a reputable developer who has 30 years of building experience with solid track record, and they are also multi-award holders in the building industry. Okay, now next is the features of the product. They have suites 1 and 2 rooms. The 2 rooms are extremely popular. They're all taken up. So the price range you'll be looking at in the column here is between 420 to 533,000, which is still a very affordable range, not only for international buyer, but also for the local as well. Yeah. So we have Wellspring, we have the Ellipse, 2 blocks with different completion date, but pretty much sit well for all Malaysian investors who want time to allow the cash flow to grow. They don't have to put in all the capital in it, just 20% down the road. Then they complete in 2024 and 25. Then is when they have already ride through all the storm in terms of recession and inflation. Yeah. Now, next is, there you go. As we mentioned earlier, this is a regen and it sits on the waterside address in London. If you are familiar with London, you can easily identify a few landmarks from these aerial pictures, such as the O2, Canary Wharf, the city as well. So also to share with you, London Mayor Sadiq Khan and his London Assembly have already moved into the Crystal Building just a few blocks away from the development. And all formal meetings of the London Assembly will all take place in this new City Hall. And they even have a cafe downstairs, which is also open to public. So the mayor says the move to the new City Hall will act as a catalyst for the regeneration for these Royal Docks, for the entire area in these Royal Docks. And I also like to emphasize that whatever Royal Eden Docks is undergoing right now is exactly what Canary Wharf has been experiencing the past decade, as we are the market pioneer for the past 10, 12 years. And what we are the perfect candidate who can testify how regen brings about changes to the area. So back in those days, we have units in 2012. Well, the one bed was transacted at 395. Then in year 2021, this is for the 2-bedroom, transacted at 830. So the gains is 110%. The 10-year capital growth in Canary Wharf, through all the factors coming from high volume market, regen effort, infra spending, such as Crossrail, DRR, new commercial zones, new housing, which also enable Canary Wharf to overturn its address, being a dodgy dock site, because it used to be very run down. I'm sure Peter knows as well. And now they have become a world-class integrated neighborhood surrounded by high-income earners who has the average household income of almost £56,000 per annum, which is 86% higher than London average. Okay. Just to give you a bit of a snapshot, studio back then was 280, now it's 448, one bed 330, now it's 555. So you can see the resemblance between Royal Eden Dock. Why I say Royal Eden Dock can be Canary Wharf, because the story is similar. Yeah. So this is the map, the location map. I won't go into details right now, but if you would like to find out more, reach out to us. I will send you all the details later. Yeah. But all in all, this map will perfectly point out where your tenants are coming from. Canary Wharf, Liverpool Street, and people who work in the London City Airport as well, just down the road here, and the bank. So this whole stretch here will be the tenant catchment market. Now, monthly estimated rental. So the figures shown in the tables are the estimate given by Foxtons. Well, it was on the brochure, so I'm just taking it down and do the comparison. There isn't a big gap between the estimated rental value or the current asking rental. So do also take note that these figures are quoted without factoring in the Crossrail. They are still revising it at the moment, but these are the figures prior to Crossrail opening in May. So as I mentioned earlier, this will be an uplift in the rental prices as soon as Crossrail is in formal operation. And now that they have already in full operation, but they went by phases. So the full integration of Crossrail will happen in November. And we personally testify how effective it is. We actually took Crossrail from Canary Wharf, and it is really just 3 minutes to get to Custom House. And then from there, you take another 5 minutes to get to Royal Eden Dock. It's amazing. So that's the end of it. If you need more details of Royal Eden Docks, reach out to us. We do share the contact details right here. Myself, Jasmine, and Peter. And of course, I've included Peter's Facebook page and the Instagram page as well. You will see lots of happy customers posting reviews on Penai group. So let's allow Jess to do a wrapping. And
thank you, Shelvin. Well, I guess I suppose for Royal Eden Docks, I think my team, myself included, we went to London in June this year. And we also, during that same month and afterwards, had clients who bought, visited, and who were interested to purchase and visited as well. They have been all very impressed with that short proximity. Malaysians don't really like to walk too far from transportation. So that's a big plus for this project. And obviously they could see what's surrounding the convenience. There's a very good Yam Cha place nearby, which a lot of Malaysian buyers have been going there as well. They're also very impressed with the quality and the belief in that vision of how this project will grow as well. So I think this has been one of a very stable project that we've been marketing and selling very well, both locally and internationally as well. So do get in touch if you are ready to discuss this further. And obviously, thank you so much again to Peter and Shelvin for sharing with us. If you do need a recording of this webinar, just let us know. We can send it to you. You can share it with your friends and your family, and we're available to talk to you anytime. Thank you so much.
thank you all.
Jasmine, Shelvin, thanks for having me.
Thank
And
you,
we
Peter.
look forward to seeing you in London all soon. Thank you. Have a nice
Yes.
weekend.
Thank you. Thank you. Enjoy the rest of the evening.
Bye. Take
Bye.
care.
Bye-bye.